AI has burst onto the scene, you have a step change in the demand for electricity. Right now, there's a 30% shortfall in terms of uranium demand over uranium supply by 2040.
What will be the primary sources of energy that could power this additional demand?
So it's mainly going to be nuclear.
I'm joined today by Ed Campbell, founder of Red Hook Phoenix Investment Partners. We'll be talking about the future of energy and the commodities and resources needed for this AI transition, one of the biggest revolutions since the Industrial Revolution. What is the actual investment implication of this revolution? We'll talk about this with Ed. Edward, welcome to the show. Good to see you.
Thank you, David. Thanks for having me.
I'd like to start with this piece of news and get you to comment on this. This week, the Department of Energy has issued a proposal for AI data centers to be built at Oak Ridge, Tennessee. Now, this was the site of apparently the founding of the original Manhattan Project. They're calling this Manhattan Project 2.0. This is the next step forward in the transformation from nuclear remediation site to nuclear renaissance hub, says the Acting Assistant Secretary of Environmental Management. The Department of Energy is excited to partner with the best of American industry to bring this vision to reality. Specifically, the Oak Ridge Reservation is one of the 4 sites identified by the Department for AI Infrastructure and Generation Projects on federal land. The DOE's Office of Science and Office of Environmental Management are now seeking proposals from the U.S. companies to potentially enter into one or more long-term leasing agreements at the site that will be solely funded by the applications. I wonder how this fits into the $500 billion Stargate initiative that Trump launched earlier in the year, and broadly how the government is planning to fund and build infrastructure for AI in our country.
Yeah, well, I think these are all examples of the geopolitical imperative of us being the major player in AI, and energy sovereignty, AI sovereignty equals energy sovereignty. And, the United States has the biggest installed base of nuclear energy, us along with Europe, but we're really not keeping up with China in terms of building our base going forward. So AI is the next great general purpose technology, like the printing press, the steam engine, electricity, or the internet. And it's really more than that, because it's a meta technology that rewires how all existing technologies are used. So it's really going to be the biggest general purpose technology out there, and that's going to create a tremendous amount of wealth, and that wealth is going to be a critical component of national power. So it's important for the United States to keep its edge there.
Infrastructure takes a lot of money, a lot of capital, a lot of time to build it out. Who's going to fund all these projects?
Well, I think the vast majority of it is going to be private capital, right? So I think that nuclear has a lot of good things going for it, if you think about it on a legislative basis. So a lot has changed since the person in the White House has changed. If we go back to the Biden administration and the Inflation Reduction Act, there was really a lot of emphasis on wind and solar, lots of subsidies. Currently, green energy, especially wind, is going through a bit of a default cycle here. One, because the projects were maybe not economically feasible. I know that here in New Jersey, there were big plans for offshore wind on the Jersey Shore, which a lot of people weren't happy about. Well, those companies have gone bankrupt, and there's a lot of stress in that industry as the subsidies are pulled back. Meanwhile, the one big beautiful bill, which pulled back those subsidies, has created a lot of tax credits for nuclear. There was an executive order signed that has an aggressive plan for us building out nuclear plants along with tax credits. And so I think maybe some of the capital that would have gone to wind and solar is now freed up for nuclear energy. So I think it's going to be a combination of tax incentives as well as private capital. And another big thing with the one big beautiful bill was the expensing of depreciation back to 100%. So that certainly is something that incentivizes investment.
I wonder if tech companies are going to become utility companies part-time as well. Take a look at this piece of news as well. This is coming from Microsoft. They're spending $1.6 billion to restart a nuclear reactor at 3 Mile Island, which is the site of the worst nuclear accident in U.S. history. It was shut down in 2019. Yeah, they are signing a 20-year power purchase agreement last September. And they've agreed to offtake the entire capacity of the plant's Unit 1 reactor, which has a capacity of 837 million watts. Yeah, they're calling the Constellation is the name of the project. The Constellation in Microsoft, sorry, the company. So Constellation acquired Unit 1 of their plant in 1999, and they're partnering with Microsoft now. What does this signal to you that tech companies are also acquiring and starting nuclear reactors?
Yeah. So the old model was hyperscalers bought from the grid like everyone else. But the new model, as you mentioned, and as is mentioned in that article, is vertical integration. So we have Microsoft backing the 3 Mile Island restart. We have Amazon sitting data centers next to nuclear plants. We have Meta engaging in a 20-year nuclear contract with Constellation. So, I think here you have SMRs turning electricity from a commodity into, from an asset that you rent to one that you want to own or control. When we think about the bigger picture in terms of electricity consumption and the long-term trends, well, if you think about the environment that we've been in for decades, grid planners were planning on declining load, right, associated with the decline in manufacturing, greater efficiency. And now that AI has burst onto the scene, you have a step change in the demand for electricity. So, um, for example, let me cite some statistics here. Um, Data centers currently are 4% of the grid share as of 2024. McKinsey estimates that they're going to be 12% by 2030. Now that's just data centers, but if we no, that's really the whole share of data centers. But if you think about just the AI workloads alone, they're currently about 3 to 4% of electricity. So when you get to 2030, you're going to run out of the grid is going to be completely clogged, right? So that's why you see a lot of these companies buying their own and locating them on their facilities, either as owners or with partners. Basically, you need a behind the fence solution rather than hooking up to the grid because the grid is going to be completely clogged.
How much energy is needed by data centers in the future? Has anyone made, well, I'm presuming people have, but what have people made in terms of projections on how much energy is going to be needed in the next 5 to 10 years?
Well, I don't have the numbers for the next 5 to 10 years, but it's
Sure, in the future, yeah.
data centers alone are going to be 12% of U.S. electricity, right? And I don't have the figures on electricity by themselves, but as that becomes a bigger share, you're going to need a lot more electricity than we're on pace to be able to provide.
I'll pull up some numbers later for the interview, but what does this mean for commodities? What will be the primary sources of energy that could power this additional demand?
So it's mainly going to be nuclear because it will involve gas, but nuclear has an advantage over gas in that it's carbon free, right? So there's still people who care about ESG as investors. So gas with carbon capture will play a role, but wind and solar are not suitable for the always on needs for AI. Wind and solar, they can't scale AI. They're just too intermittent and too land intensive. For example, if you look at a density gap, right, in order to produce 100 megawatts of from a data center, For an SMR, you can do that on less than 1 acre of land. Whereas for solar, that's going to take 500 to 600 acres. For wind, it's going to take 4,000 to 5,000 acres. So both in terms of the land use and in terms of the intermittency, they're simply not well suited for the AI age. You need basically 24/7 reliable power, and you basically can't wait for the sun up to come back up or wait for the wind to start blowing again. And even with improved battery storage, it's just not going to be able to scale in the same way nuclear can with the demands for AI.
I just found something as we were talking just now. So this is an article from Forbes. They're pushing AI is pushing the world toward an energy crisis. Catchy title. Good headline. At present, this accounts for 3%. So data centers and their associated transmissions account for 3% of global consumption, emitting as much CO2 as Brazil. Now,
Yeah, so it's more than a lot of countries, yes.
it's looking forward, they're projecting, or whoever's done the study is projecting that in the U.S. alone, the increase in power demand due to data centers is expected to rise from 200 terawatt hours as of 2022 to 260 in 2026, equivalent to 6% of all power use across the country. Expected demand expected to double by 2030. That's only in a couple years. So we've talked about nuclear energy. What about the grid? Do we have the load at our current grid to service this kind of demand?
I don't have the numbers. We're servicing it now, fine, but the problem is, as we scale and electricity production is not going to be able to keep up with electricity demand outside of a much bigger footprint for nuclear.
So what's the thesis around uranium investing then? If nuclear is going to be the primary energy source in the future for servicing additional AI data center demands, then the power source of nuclear reactors, uranium, certainly should be very high in demand. What's your play there?
Yeah, so we like the commodity. We like uranium miners. There's basically, right now there's a 30% shortfall in terms of uranium demand over uranium supply by 2040. That's going to double. I think that there's an opportunity for Canada. Canada is poised to be a global energy powerhouse. Um, so if you look at Camco and their next generation Rook 1, that's set to be the world's largest uranium mine by 2030. And if you think about things from a geopolitical sense, right, we're no longer in a world where efficiency and globalization is the main thing. We're breaking into a world of smaller blocks, and the US aligned world is not going to be able to rely on Russia and China for. Russia was a big player in uranium. So places like Canada and Australia are going to have to fill that gap. So if we can't rely on China and Russia for critical minerals, places like Canada have an opportunity to step up here. So, in terms of who are the winners from an investment perspective, it includes uranium miners, it includes nuclear utilities and operators, reactor tech startups, people who build SMRs. NuScale is one name that comes to mind. If you want to think about an ETF, there are thematic ETFs that focus on both uranium as a commodity, but also the uranium miners. The Sprout Uranium Trust is one that comes to mind. And in terms of losers, I think we're looking at pure play wind and solar without storage. Fossil fuel generators without a decarbonization pathway are going to have a tough time. and grid-constrained utilities that are bypassed by some of the PPAs that nuclear operators are able to generate.
This is a chart from one of your reports,
Okay.
the AI Nuclear Nexus July report. So it's showing different countries from different parts of the world with their nuclear capacity right now. Red bar showing operating reactors, blue bar under construction, and green bar planned. It looks like the US, if you add all the bars, is actually going to be behind China, assuming they actually go ahead with the planned nuclear construction. What is ROW, by the way?
Rest of the world.
Oh,
That's
rest of the
just,
world. Okay.
yeah,
So
everyone else. Yeah. So, I mean, as I was saying before, you can see that the US and Europe has the biggest installed base, but China is moving rapidly. And Europe in particular had been going the other way in terms of phasing out their nuclear plants. Now they're starting to reverse course, but the US and Europe are nowhere near moving at the same pace that China is, and that risks us being left behind, right? So that's China as a you know command and control economy. They can move quick. I guess this is one of the drawbacks of a constitutional republic that you can't move as quickly as the Chinese Communist government can.
you write that winners deliver dense, reliable, carbon-free power. Losers do not. You also write that pure play wind and solar developers without storage face limits as AI-driven demand prioritizes dense, always-on power. So tell us why you're bearish on pure play wind and solar.
Well, they're not well suited to provide for the demands of AI. We already talked about the land density issue and the intermittency. Also, they're currently going through a difficult default cycle, and the rug is being pulled out from under them in terms of the subsidies. So, yeah, there's just they're basically they will still play a role in decarbonization and decarbonization goals, but I do see their role, you know, becoming less, and they're basically going to miss the AI megatrend.
Let's talk about the next page where you disclose that you have a uranium miners trade, URA ETF, that's up about 70% as of June 2025. You write that current primary production of uranium falls short of demand by roughly 30%. This is expected to get worse with demand growing, outpacing supply. The shortfall is expected to double to 60% by the time planned nuclear facilities become operational, 2040-ish. And so the thesis for uranium miners now, are they just a leverage play on uranium itself, or is there a different story?
It's basically a leverage play on uranium itself.
Okay.
Yeah, we see this as a long-term tailwind for these companies. Yeah, so it's not really particular to. It's really just a mega trend that they're going to be able to surf.
Is it true that currently in North America, most producers aren't actually, in production, or at least not in the volume that they should be?
Definitely not in the volume that they should be. I will point out that when you think about nuclear as a clean energy source, not only does it produce energy with no carbon emissions, uranium mining is also a lot cleaner compared to some of the alternative things like lithium and copper that would play a big role in the green energy place.
What about construction companies involved in the construction of new plants? Is that primarily done by the private sector? And if so, is that investable?
Construction companies, I'm not too familiar with, but a lot of the infrastructure build out is going to be driven by private investment. For example, some of the things that I'm focused on in my work in private equity and venture funding is on the infrastructure, right? So land purchases, to build data centers powered by SMRs, classified ready sites that have a national security angle. And yeah, the public markets doesn't really like to get involved in long-term projects like this until the cash flows are very visible. So I do see a lot of the investments related to this theme, um, more of a play in private markets than public. I mean, once those assets are up and running and cash flowing, they'll get spun out into an ETF or a data center REIT. But until then, it's mainly going to be in the domain of private investing.
You write also that SMR, small modular reactors, are first of a kind project, so it's going to take some time before they prove themselves for financing to come in. Now, ultimately, the conclusion of this report is that the atomic engine of the AI century is upon us. So the rise of AI is reshaping the physical economy in ways that are only beginning to be understood. Tell us about that, Ed. How's our economy going to be changed forever?
Well, data centers are the factories of the 21st century, and it's more than just a digital story, right? The scaffolding involves physical structures that require things like concrete, and so it's going to be more than just in the digital space. It's going to be about the physical scaffolding that is needed for things like chips and data centers and SMRs and all of the equipment related to that. So, in terms of the bottom line of the report, AI's exponential energy demand makes nuclear not optional, but essential. Uranium and nuclear equities have durable tailwinds. They're structurally undersupplied. They have policy support, AI demand, and I think that's fueling a nuclear renaissance. And it's not a short-term theme. It's the atomic engine of the AI century, as you mentioned.
The opposition to this plan, what is the pushback on a nuclear-powered society?
Well, there are public perceptions. Obviously, there are things that happened, like Fukushima, 3 Mile Island. If you go all the way back, Chernobyl. But the new, I mean, a lot of those things. Chernobyl required massive incompetence on a huge scale in order for something bad to happen. I don't want to minimize these things, but if you look at what the actual consequences of 3 Mile Island and Fukushima were, they weren't that great. And as we come up with new generations of the technology, especially the SMRs, they get safer and safer. And I do think the public perception is changing. We're seeing that policy has become much more supportive. Certainly, Trump's executive order streamlines timelines. So I think the direction of travel is clear, but the path is going to be jagged for investors. So investors should expect progress, but it's not going to be a straight line. And then we do have these choke points with uranium, right? So unless we have a lot more uranium, it's going to be hard for us to scale in the way that we need to in order to meet AI demand. So I think investors should focus on those choke points and look for opportunities there.
With a 70% climb on URA over the past couple of months, is that fairly valued already, you think?
I don't really see that, I'm of the view as an investor is that valuation only matters when it's at extremes. And I don't think we see extreme valuations in these companies, basically because of the history and the prior bearishness. Sure, it will get overbought from time to time, and there'll be shakeouts, but I think these are positions that you want to hold for the long run. And when they do have shakeouts, add more.
All right, excellent. Thank you very much. We appreciate your insights today, Ed. Where can we find your work?
Well, you can. I publish thematic research for Rosenberg Research Associates, partner with Dave Rosenberg. So subscribe to Rosenberg Research, and you can get my insights as well as the rest of the team.
All right. Thank you very much, Ed. We'll follow you there. Appreciate your time. We'll speak again soon. Take care.
All right. Thank you, David. Thanks for having me.
Thank you for watching. Don't forget to like and subscribe.